Good morning and happy Monday to all of you. Your man Omid here with you once again to help you make sense of this crazy thing that we call a market. Let's dive right in. I got lots to cover with you. So, the technicals of this week. So, we've been on a nice little climb, haven't we? Day after day, we've lost some, we've gained some, but overall, we're doing better, which is wonderful. Now, the statistics or the trend meter, if you will, is showing me that we're pretty long on being overbought. Typically, when I see this and there's no other pushes and pulls in the marketplace, we tend to have some profit taken off the table. So let's see if that's the case for this week. It all really depends on if the mortgage backed securities can survive this test and close above the 100-day moving average, whether we float or lock today. What's going on with rates? Last week, 6.91% on a 30-year fix, 705 on the jumbo. This week, 699 on the jumbo, 6.72 on the 30-year fixed. Once again, remember these are average rates nationally, and every situation will differ. Now, let's talk about money a little bit, okay? And so the one thing that's on everybody's mind is cryptocurrency with the kind of the meteoric rise that it's had, especially in the last 30 days. It only serves us all to think about how does this affect home prices, home buying, and buying a loan. So I've gathered some information with you here today. It's going to be really good but deep information. So hang in there with me and let's get it. So one of the things that we're seeing is that there's categories of who holds crypto at this point. So 17% of all adults own crypto. The biggest cohort, if you will, section in all of this is the 18 to 29 year olds at 29%. So 29% of all the crypto wealth is held by folks in that age range. Folks 30 to 49 hold 25, and anybody 50 and over, hands up, own 8% of it. Now, here's the thing that's interesting. The age group with the largest crypto, these folks right over here, the 18 to 29, they only have an 8% home ownership. So it stands to reason that once these guys start cashing in their chips, they're going to come see all of us and look for homes to buy. So I'll come back to that in a second. Fact of the matter is this: we've got a $1.9 trillion year to date in crypto and $1.2 trillion rise of it in the last 30 days since the election. So I think that this next point is going to make a lot more sense. That the FDIC, Federal Depositors Insurance Corporation, did a research paper, and they found out that those who have gains in wealth coming from crypto have the propensity to spend that is twice as high as gains from other wealth. We're talking about other wealth of selling a business, other wealth of cashing in their stock. These folks have twice the propensity to spend it. So that's pretty interesting. And the study also shows that counties with higher crypto holders had higher real estate prices, obviously because there's a windfall feel to all of this, right? And so as soon as that happens, when they cash it in, then they're going to want to go out and buy homes, and they drive the prices and the demand up. The one thing that I didn't know from this study was that the first time home buyers are at the lowest history at 24% of the market, with historically higher median age of 38. So our first time home buyers are actually getting older. And I think what's happening is that the 18 to 29 cohort is spending so much of their money investing in this, and they're not necessarily diversifying it and putting it in other assets, which is really interesting to watch. Median age of a repeat buyer is now 61 years old, meaning that I think because of what's happened after COVID and the meteoric rise of real estate itself, there's lots of folks that are sitting on that 2.5% mortgages, and they're just waiting and waiting and waiting longer to sell their house and be a repeat buyer now. So really interesting information for all of us who are in this industry or thinking about buying a home to take into consideration. And if you're one of those folks that holds, lots and lots of crypto, good for you. And now let's talk about how you can and can't spend it. All right. So I accept Bitcoin. No, says Fannie Mae. So here are Fannie Mae key updates on crypto. This was pulled as of today. Now, before anybody in here starts to be a keyboard cowboy and try to roast, this is for Fannie Mae loans. So, as an example, a conforming loan up to $1,037,300,000 in King County. There are other lenders, other non-QM lenders, qualified mortgage lenders, that will lend money based on Bitcoin, but Fannie Mae is not one of them. So Income qualification. Cryptocurrency cannot be used to qualify a buyer for a loan. Its asset portion of it cannot establish income continuance for the future. You cannot buy a property or give down payment monies or earnest monies using crypto directly. And if you're somebody who receives a rental income from crypto, it must be in US dollars and not in crypto, or else I can't use it to qualify you. So now here's the thing. If you have cryptocurrency, recognize that you're going to have to exchange it into USD, and it's acceptable if you can provide documentation of evidence of where it was converted from, where it started and what it was converted to. And then the funds are held in a US bank account and verified for at least 2 months prior to closing. So if you're somebody who's got a bunch of crypto and you want to buy a house, this is not the end of the story for you. You absolutely can, and you can get the rates and the fees of a regular low cost loan. You don't have to go into hard money to do this. We just have to be smart about it, recognize that we have it, and then come up with a plan and timing that works best for you. Okay? What's going on for this week? Well, productivity and unit labor costs are coming up. Basically, this measures the efficiency and saying, okay, how much does it cost for us as a labor force to produce a unit of anything and everything? That comes out on Tuesday. Consumer price index measuring wholesale or retail inflation comes out on Wednesday, including a 10-year treasury auction. I've painted that red today because it's going to give me a sense of what the want to is, if you will, from the auctioneers and the bond traders. The PPI measuring wholesale inflation is released on Thursday, including the initial jobless claims. So let's see what that compared to from last week, and nothing on Friday. Last but not least, if you are already not following us on Instagram, here's another great reason to. On a daily, we are now posting this little quick snapshot that tells you exactly where the average rates are. So I know we talk about it once a week here. Get on Instagram and follow us there, and you can have access to daily average rates on a regular basis. As always, subscribe, like, and comment, and please share this with somebody who needs to see it. We appreciate your patronage. Have a fantastic week, and chat with you soon.